very interesting country, this very interesting region. He's based in Beijing, right? You're based in Beijing, right?
Well, normally, yes, but I have to say I've been based in New York for the last 3 months, and it looks like I'll be here for a while.
For a while, exactly. Yeah, great. So, but anyway, we have a lot to talk about. Arthur, on behalf of XP Investments and XP Investimentos, we have a bunch of people from all over the world calling into this meeting. It's an honor to have you here. Thank you very much for your friendship and for the long-standing relationship that Gavekal Dragonomics and XP have been having for many years already. So Arthur has agreed to give us to start the conversation with some slides, with some presentation and some comments, and then we will go into the question and answer session. So again, thank you very much on behalf of XP. Arthur, the floor is yours.
Yeah, I was actually thinking that I would attempt to do this without slides and just give you a kind of perspective on how we see China going and the relationship with the United States and the epidemic and how all these different variables will interact over the course of the next several months. I think the starting point is to understand what is the Chinese government's objective in managing the COVID epidemic, because this is really the central problem that all governments in the world face right now, is how do you manage this epidemic and how do you balance this against other objectives. And I think what we're seeing right now is that the government's objective is basically to have as close to 0 cases as they possibly can, right? So this is a very ambitious objective. It's one that they sort of achieved back in March. They stumbled around in their early response to the virus, but then had a very draconian lockdown for about 6 weeks in most of the country and more than 2 months in the hardest hit area. Then they gradually reopened over a period of time. But what we've seen just in the recent days is that as we have seen new small outbreaks occur, there is a very aggressive response, and they have started to roll back some of the opening measures in the affected areas, which are mainly around Beijing. And I stress this because I think it is very likely that we will see more small localized outbreaks like this popping up over China in the coming months. The virus transmits very easily. It's just not realistic that in a country as large as China, you would actually be able to get to 0 this early and keep it that way. So I think one thing that we have to bear in mind is that because the government has such an ambitious target for keeping the virus near 0, that is going to impose some constraints on the recovery. Now, I think what they're trying to do right now is when there's a localized outbreak like we've seen in Beijing, they take local measures that are very strict, but these don't apply to the rest of the country. And I think we have to accept that there's probably going to be a lot of that here and there over the coming months. If they are vigilant, you will probably not need to get back to a situation where you need to have a larger scale regional or national lockdown. But there will be this continuous game of whack-a-mole. And so what are the implications of that? So implication number one is that I think it's going to be a little bit hard for a lot of the consumer discretionary stuff that depends on restaurants and high intensity social interactions to come back. I think people will be cautious about that because every time the government cracks down on another outbreak, people in that city certainly, and maybe in other places, will say, oh, I need to be careful, right? So I think consumers who have shown themselves to be very rapid to come back in things like houses and automobiles, very big purchases, which were just deferred from the last few months. But they've been more reluctant to come back to some of these, more smaller scale discretionary things. So I think it's kind of a long run negative for consumer spending over the course of this year. I think the other thing that it clearly does is that it will make it harder to resume full scale travel within the country, because the first thing that will do is, this has already happened in Beijing. After they had some cases in Beijing, there were some provinces in other parts of China that said, oh, well, if you're coming from this part of Beijing to us, you need to quarantine for 2 weeks, right? So the more of these things you have, the more you'll have individual provinces trying to keep out people from the harder hit areas. So I think domestic air travel in particular and anything related to that, slow to come back. And then finally, I think this will also be very bad for the country's reopening to the rest of the world. And the government is very concerned about imported cases. They've claimed that this latest outbreak in the wholesale market in Beijing came from imported salmon that people touched. Frankly, I think that's not a very credible claim, but anyway, that's kind of the attitude. So it's going to be very difficult for sort of normal personal activities that rely on international travel to come back. Stepping back from that, so that's kind of the baseline. Now, the second question is like, what kind of economic recovery are we seeing in China? And we're basically seeing one that was quite strong in March. It sort of paused in April, was quite strong in May again, and now seems to be hitting a plateau at something like, I don't know, 95% or so of normal activity. So we're still not quite up to full normal. We're pretty close in most areas. But we don't seem to be getting that last few percent. Most of the daily indicators that we track of rail traffic and electricity production and so forth have kind of flattened out. We're also starting to see some signs in the auto sector. So there was a big boom in auto sales, and our contacts in the auto sector have said, yeah, that's now over and sales are plateauing. So I think some of the pent-up demand that you saw has already expressed itself, and now you're just in a slower moving, more conservative, more cautious economy generally. And so I think getting back to a really robust rate of growth is going to take some time. And then this, raises a question about, so what is the government going to do to stimulate? And I think one of the interesting things is that by comparison to governments in Europe and the United States and some other places that sort of at the drop of the hat were willing to put in 10% of GDP as stimulus through income support and other things, China has been relatively cautious on this. And this is not because the economic impact of the virus was less. We estimate that true unemployment in the cities probably peaked at around 20%, which is a very large number. It's hard to tell because the data are bad, but triangulating different pieces of data, that's what we come up with. And I think most other analysts of China have come to very similar conclusions. So there's a lot of unemployment, a lot of underemployment, a lot of lost wages. The government has not stepped forward with the same kind of support that you've seen in the rich countries. And they've also been relatively reluctant to ease monetary policy to the same degree or to pump more fiscal stimulus through infrastructure and so forth. They're doing some of all of this, but they're just not doing it at the scale that we're used to with China, and they're not doing it at the scale that we're seeing in the United States and Europe. And so why is this? I think the reason is very clearly that they remain concerned about the structural problems in the economy that they've been battling for several years: high debt, fiscal indiscipline at the local government level. And so as they put stimulus into the economy, they want to be very careful that it does not lead to the kinds of excesses that we saw in past cycles. So what that means is that they kind of dribble it out here and there. And they've, I think, basically over the course of the last few months, they've kept doing more and more as they've seen the need for more and more. But it's very different than the big bang that we've seen previously. And if you look at things like the housing sector, they are very sensitive to the question of, okay, they want to have a robust construction sector because that's important for the industrial economy, but they don't want to build up huge inventories of unsellable housing, and which is already a problem in the lower tier cities. And so their policy is really walking a tightrope between putting enough support to get some of the economic engines running without creating excess capacity, huge inventories, and massive debts. And so I think what we can expect for the rest of the year is this sort of careful calibration of some stimulus with, some efforts to keep things reined in. I think the area of concern that we have at the moment is the export sector, because one of the things that has held up surprisingly well in the economic data is the export sector. We've had some fall in exports, but not nearly as much as we anticipated. The export orders component of the PMI is suggesting that we could have, a 20+% decline in export growth, which is in exports, which is what we saw in the great financial crisis of 2008, 2009. So far, that has not happened. So, the question is, what's going on? Well, one answer for this is that there essentially was a lot of stuff that was in the pipeline that got shipped out. And so that was fine, but the new orders are very low. And so we're going to see, much weaker export numbers going ahead. The problem with that argument is we thought that effect was going to show up in May. It really did not. So maybe it's just delayed a little bit longer than we thought, or maybe there's some other positives going on. Another factor that's quite interesting is that the global electronics cycle has actually held up quite well. And so the people on our team who look at the broader Asian economy are actually, not ultra optimistic, but they're, I think, relatively sanguine about Northeast Asia in general, because they see that, demand for everything from semiconductors on up is clearly been in an upswing, and this really has not been interrupted by the virus. And so since such a large proportion of China's exports are electronics related, if we are indeed seeing a sustained upswing in the electronics sector, that means, I think we're in pretty good shape. And there are various explanations for this. Obviously, companies, may have a higher demand for IT equipment because everyone's working from home now, et cetera, et cetera. So I guess I'm a little bit nervous about that, but so far, I think one of the things we want to do is look very carefully at the export numbers coming out of China. And if they continue to surprise on the upside, which means, maybe they fall by a few percent instead of by 10 or 20%. So they don't have to be strongly positive. But as long as they're not strongly negative, then I think that gives us more confidence that China's economy can recover quicker and with less need for fiscal support from the government. So if I had to pick one indicator or one set of indicators to look at over the next, say, month or two in China, I think I would pick anything related to exports, which tells you, how well the external sector is doing. So I think that's basically how I see the economic outlook for China. I think to summarize it, it's getting better. The pace of improvement has definitely slowed down over the last few weeks. It remains at risk from renewed outbreaks of the virus, which will retard the recovery in consumer spending. It remains at risk from the fact that the government doesn't want to stimulate too hard, either monetary or fiscal, because of their concerns about debt. And it remains at risk because of, a potential worse downturn in the export sector. So those are the things to watch. Let me just make a few other comments on a couple of other topics, and then Alberto, maybe we can explore areas of interest. So I think I think the other sort of large issue that's out there is the relationship between the United States and China, which it just has more and more dimensions as we go along. It started out as a trade war, then it turned into a war over technology, and now it's turned into a war over what's going on in Hong Kong, and this has begun to bleed over into the potential for a conflict in the financial arena. So let me, I think, just go through each of those dimensions in turn and give you kind of an update. So on the trade war, as you may recall, many centuries ago, back in January, we had a trade deal and between the US and China, and it was kind of a strange deal. But one thing that was very clear about it to us was that it was intentionally set up essentially to take trade off the table until after the US election in November. It was very clearly, Trump had made the political decision that he didn't want to be fighting a trade war while he was running for re-election. He wanted to run as the guy who got the best deal ever with China. So he was going to do that deal, and he was going to run on that. And then if he won the election again, then maybe he'd restart the trade war, but he was not going to make the trade war centerpiece of his campaign, right? So going into the year before, got to COVID, my baseline view is, of all the things that we have to worry about in 2020, the trade war probably is not one of them. We got into a little bit of a problem, in April and May, when Trump was very angry about how the epidemic was going in the United States. He wanted to blame China. And apparently for a little while, he was thinking, oh, maybe we need to just get rid of this trade deal and take the gloves off and make the election about fighting China on all fronts. But evidently he decided against that. I think he got a lot of pushback, not only from his economic advisors, but from political advisors who said, he still needs the votes in the farm states. So I think the trade war is basically on hold, right? Which is good news. That's really the only good news. If you look at the other stuff, I think basically Trump has given the green light to the most hardline members of his administration to be, quite hawkish on China. There's a lot of anti-China feeling in Congress. There's something like 180 bills relating to China in this session of the Congress. Normally it's like 3 or 4 at any given time. All of these are bills to do something to hurt China. Very few of them will pass, but it's a signal of the antipathy that people both in the Republican and the Democratic Party have towards China. They see China as a problematic force and one that's not good for U.S. interests. So I think the technology sector remains a focus here. There's a continuing desire to constrain Huawei, maybe prevent it from being able to build 5G networks, to put export controls on more Chinese companies, and just generally slow down the pace of the flow of technology from the U.S. to China. This I think got a boost with all of the stuff going on in Hong Kong, where, for those of you who don't follow it, basically there were a lot of protests last year about a law which would have made it possible to extradite people from Hong Kong into the mainland judicial system. People in Hong Kong did not like that. They were out on the streets for months. Things finally quieted down, but then Beijing responded to this by saying, okay, we're now going to pass a new national security law, which means that if we see that there's a violation of national security in Hong Kong, which could be an illegal protest or in some anti-government demonstration, then we will have a law that enables us to arrest these people, not under Hong Kong law, but under a mainland law. And impose penalties on them for political speech. And so again, this has created a big, some protests in Hong Kong and a lot of pushback from the United States. And the U.S. has now talked about removing a sort of a special trade status that it granted to Hong Kong back in the 1990s that said we're going to treat Hong Kong separately from China for the purposes of trade and other economic transactions because it has a separate legal system. And now the US is on the verge of saying, actually, you don't have a separate legal system because China is imposing this Chinese law in Hong Kong. Therefore, we're going to remove these special benefits. Now, this is basically symbolic, right? These special benefits really only apply to exports from Hong Kong that are made in Hong Kong, which is a tiny fraction of what goes through Hong Kong. Most of it comes from the mainland. It relates to technology flows. Again, Hong Kong is really not very important in that regard. So I think if this happens, we need to recognize this is a political gesture by the United States. It doesn't have a lot of immediate impact, but it does send a signal potentially that things could get worse. And so, I think a lot of businesses are going to have to, reconsider whether they really want to use Hong Kong as the hub for their activities. At the moment, they seem very happy to. I think the view of most business and financial people in Hong Kong is, yeah, it's a shame that civil liberties are being restricted in Hong Kong, and it's a shame that this national security law is being imposed, and that's bad politically for Hong Kong. But from the standpoint of being able to do business or do financial transactions, it basically has no impact. So we can continue doing our thing, even though the political environment in Hong Kong becomes, colder. So I think that's kind of where it is, but it certainly has stirred, the whole Hong Kong issue has stirred up a lot of sentiment in the U.S. Congress, particularly, and that means that I think we're going to see, continuing, basically worsening of U.S.-China relations. Final point that I wanted to make on this relates to basically the financial issues. So we've seen the progression of sort of anti-China stuff in Washington move from just trade on goods to these broader concerns about technology. And now you are starting to see a real movement to try to constrict financial flows to China. And so we saw President Trump essentially ordered the federal employee pension system not to create a fund that had exposure to Chinese equities through an A-share ETF. You are seeing some pressure at state level funds to do same things. I don't think that's going to be effective. And the federal government has no ability to order state pension funds or university endowments to change their investment mix. But you're seeing, you're seeing more pressure in that way. You're also seeing you've seen the Senate pass a bill that would effectively force Chinese companies that are listed on U.S. stock markets to delist because they can't meet oversight standards for their accounts. And this bill is now in the House. There's a very good chance it will pass. If it passes, Trump will certainly sign it. And then that sets up a 3-year window during which companies can negotiate to try and maintain their status. And if they can't do that, then they have to leave the US markets. Chinese companies on the US stock market have a combined market cap of about $1 trillion. They include companies like Alibaba, Tencent, et cetera. This is a big deal. And so effectively, if it went through, these companies would be forced to delist from the US and relist somewhere else, probably in Hong Kong. That would be good for the Hong Kong financial markets, but it would be, I think, very disruptive for the companies. And then it also would encourage the US administration to look at ways that they can put pressure on Hong Kong and make it harder for Hong Kong to list these companies. That's a little bit of a nuclear weapon, because the only thing that you could really do to make trouble for Hong Kong would be to somehow cut off or severely restrict its access to the US dollar funding system. That would be catastrophic for a host of US financial institutions that have big presences there, huge exposures to China. So it's a little bit hard to see the US being able to do anything financially vis-a-vis Hong Kong that wouldn't hurt the US more than it hurt China. But I think we can expect the US Treasury and other agencies to get more and more creative in figuring out ways to, narrow the financial pipes going from the US to China and make it harder for Chinese entities of all kinds to tap into U.S. capital, right? And I think that is likely to occur to one degree or another, whether we have a second Trump administration or if Biden comes in, because even within the Democratic Party, the anti-China sentiment is running very strong. So I guess my bottom line on all of this US-China stuff is a lot of it is political in nature, and a lot of it is in terms of symbolism and gestures. So the macro impact of these kinds of things, I think, is not likely to be very high in the next, couple of years. The sectoral impact on the affected companies, on the tech sector through the export controls, and on certain financial actors, that could be quite important, right? So it's going to be at the sector or the company level. You could have some, pretty dire effects. I don't think it's a macro story, other than that, obviously markets are not super happy when they see this rising level of tension between the U.S. and China. But at the moment, I have to say, if you look at world markets now, basically this is not an issue. What they're mainly trading on is some kind of, sentiment factors about how fast they think the recovery from the virus is going to be. So I think that's the other thing, is that these U.S.-China tensions, they're not going away. They are going to get worse. But they probably are only going to start having a more decisive effect on market activity when we're a little bit past the main impact, which is just all of the stuff that's swirling around the COVID epidemic and the recovery from that. So I think I have covered a lot of ground here, and most of the questions, Alberto, that you sent me that had come in previously. So it's probably now a good time to open up and field any other queries that you may have.
Excellent, Arthur. Thank you. Thanks for those comments. We have a full house. I think almost 200 people calling in. So we do have a lot of questions. But I guess one of the things, and I got to tell you, I was very, very surprised by this. I used to consider myself somebody who knew something about China, but this morning's piece of news on the escalation of the tensions in between China and India.
Right.
Another issue, and I got questions from clients on that specific issue, and I had to tell them that I'm completely ignorant about that issue. I was not focused. I don't know if you have any views on
this is actually something that we do try to track. It's sort of been an ongoing thing. So the sort of disturbing thing about this is that the initial reports seem to be saying, well, there was a few Indian soldiers who got killed. Now I'm getting reports that actually there was like 20 or 30 people killed on both sides, and that it was, a bit worse than originally reported. But the background on this is that China and India essentially have had a border dispute since the 1950s in these very inhospitable regions up in the Himalayas. They fought a war over it in 1962, where the Indians thought they would basically do a little bit of a land grab and stuff in a piece of territory that they thought they should own. The Chinese drove them back and basically routed them. And there's been kind of a standoff since then. And occasional clashes like this where they'll throw rocks at each other. In this particular region, the soldiers are supposed to be unarmed, right? So they can't actually fire at each other, but they can hurl rocks and boulders and whatever. Obviously this is of concern because you're talking about two big nuclear powers here. I think my basic view on this is that this is the latest incident of a long-running irritant. It's low-level stuff. It would take, I think, pretty severe miscalculations on both sides for this to escalate into something more material. So while you can never write anything off, I would say, we probably have bigger things to worry about right now than this.
Good. Arthur, I think I remember that the last time I saw you in person was in March, at the beginning of March. You guys had a conference at the Harvard Club in New York.
Yep.
And you were speaking about, basically all the follow through of the pandemic. Of course, China was already pretty much getting out of the issue. The U.S. had not even started the whole mess, and we had not started the lockdown and everything. And I remember you kept on mentioning that yes, the economy was going to contract in the first quarter of the year on a year-over-year basis, which was not a consensus call in the market at that point in time, either because we didn't know that it was going to be that bad, or because we never thought that the Chinese were going to be actually pretty, how do we put it, honest.
Right.
And so the view of the market was not that we're going to see that, and we did.
Yep.
So what is the view from Gavekal at this point in time, Gavekal Economics, in terms of the year as a whole, in terms of how big the contraction could turn out to be or not, or if we're going to see some positive numbers this year?
Yeah, I think, so first I would say, indeed, we thought that the first quarter numbers were pretty credible. I think they talked about a 6 or 7% contraction in GDP, and you could quibble with bits and pieces of it, but basically, it seemed to us pretty plausible given all the other indicators that we looked at. So I think they were being pretty honest about the scale of the contraction. I don't know whether they will continue to be that honest, but we'll see. I think our view is that there's a pretty good chance that they can end up for the year as a whole with something like 0, or maybe even slightly positive, 0 to 1%. There's a lot of uncertainty around these projections because we don't know, how bad these little outbreaks will be. We don't know if there's going to be a severe second wave outbreak in the fall when things get colder. Some people are worried about that. We don't know. A big variable, as I mentioned, is the export sector. If that gets as bad as the leading indicators say it is, then that is going to knock quite a bit off growth. But if we keep getting the kind of above expectation readings from the export sector, then I think it would be pretty straightforward actually for China to post positive growth for the year. Not a lot, maybe 1%. So I think that's kind of the territory that we're in right now, is thinking that in broad terms, they'll be flat for the year. And then the question is, when you go into 2021, how strong a rebound do you get there? And I guess my sort of feeling on that would be that basically that lost ground, we don't recover it, right? So if you think of the curve going up like this, and then this is the trend line, right? And actually we have a dip, and then it resumes the same trend line, but below, right? So we don't ever get back up to the previous trend line. So it's not like we have 1% this year and then like 9% the next year because we're catching up. It's like we get 1% this year or 0 or whatever, and then we get back up next year to somewhere between 5 and 6%, which was like the pre-existing trend rate of growth. So I think there's some permanent loss of output there, which obviously will have some ripple effects. And actually, if you listen to Jerome Powell talking about the U.S. economy, that's, I think, essentially what he's saying there, that there are going to be these, even if you have a pretty decent recovery, you're going to have these long-term structural gaps that got created by the downturn. So I think that's how we would see it. Not so bad, actually, because I think most large economies like the US, Europe, they're going to be in negative territory for the year as a whole, for sure. I think for China to post flat growth is both achievable and it's a pretty good outcome.
Great. The other thing that I was wondering about the other day is I also remember that you mentioned this on your conference in New York in early March, that from the people that had gone into the lunar year, the vacation time, whatever, when the whole thing started, then hundreds of millions or 100 million people could not actually come back to the city centers where they used to work, and they were staying in their villages and stuff like that. And that most, I guess, returned, but some of them did not return.
Yeah.
In if you see the data on the PMIs, which I again, I don't have any doubt. I mean, I don't have a reason to doubt it, and I don't think anybody has
Right.
much reason to doubt it as well. So
Right.
I guess if you're having this rebound on industrial activity with so many or with a reduced amount of workers, that implies that your total factor productivity, it's probably going up as we speak.
Right.
It should be a positive going forward, but at the same time, I guess the people
Yeah.
that are in the villages, if they're
Yeah.
working, making less money, less consumption, et cetera, et cetera. So how are you guys
Yeah.
addressing that?
Well, so on the productivity question, I would say that, first of all, I think you've had a fairly significant reduction of the export sector workforce, right? Not as bad as you had in 2008, 2009, but significant. Of course, those are on a productivity basis. Those are the most productive workers. So I think you kind of had a lot. A chunk of the more productive workers have been taken out of the system. Second, if you look, at the kind of productivity is this kind of weird thing because it's this ratio and it can change depending on whether the numerator or the denominator changes. But if you look at over a long term, trends in productivity, those are going to be driven by essentially the pace of technological development. The concern that we would have there is that China's technological development plans were very dependent on, essentially being able to import core technology and components from the United States. And if they can't do that anymore, then they're kind of stuffed. Or not stuffed, but it's a lot harder for them to generate that growth. So I think there's the way that I think about the productivity side of the equation is that I'm not so concerned about the short-term volatility. I am somewhat concerned about the long-term, drag on Chinese productivity from a technology war with the United States. And I would say, I think you put your finger on the sort of one of the key things that is concerning us is that it is really crucial for China to be able to rely more on domestic demand. And the government has made it clear that there is a limit to how much domestic investment demand they're willing and able to stimulate. So you have to get consumers back in the game. And the level of job losses and income loss that we've seen suggests that it's going to be a long, slow slog back, right? So I think that in terms of the growth equation, I think we would probably have a bigger concern about consumers being taken out of the market than enthusiasm about how productivity is growing because so many people have been laid off. The best time for productivity in the United States was the 1930s when 20% of the workforce was not working, and that was great for the productivity stats, but it wasn't really great for people or in a broad sense for the economy at that time. So that's kind of how I look at it.
Good. The other thing that I was wondering about, and I keep on getting this question from clients as well, because again, we have to make this analysis that the U.S. is 2 months after where China was. There's
Right.
a 2-month lag in terms of,
Right.
of performance. So when we need to extrapolate how traveling is going to look like in 2 or 3 months, then it's probably a good idea to look at the Chinese and South Korean experiences. And one thing that I've been seeing, just looking at the U.S. and Tom Lee has been very adamant about this issue, trying to show the performance or how it has changed, how the polls have changed, the polling has changed. In terms of the question of, are you willing to fly before?
Right.
And a month ago, 80% of the people said, hell no.
Yeah.
And 70% no way. Now I think we're down to 60-40, which people have become a little bit more comfortable of the going back to some sort of normality, despite the fact that we're going to vaccine. Since China's 2 months ahead, can can you share with us a little bit of what may has or what happened?
Yeah, I think the problem is, and I'm a little bit guilty of this too, is that, China is kind of a good template, if you will, because they went through this earlier. On the other hand, they were much stricter in the lockdowns than the U.S. ever was. And they have a central government that can basically control things in a much more direct way than the federal government can in the U.S. So I think it's a little bit messy. You're still seeing, I think, I don't have the numbers in front of me, but basically the transport numbers in China were showing that, people were definitely back in their cars. They were definitely reluctant to get into mass transit. From what I hear in Beijing and Shanghai, that's still basically the case, that the subways are pretty light. But the streets are very crowded, and there has been quite a pickup in intercity travel, and a couple of my own staff members, because they can't leave China or have been taking holidays within China. So yeah, and I think psychologically, what we can see is that people are willing to be cooped up for 2 months or so, but then after that, they really have to get out. I think the problem in the U.S. is going to be that in China, I think it was pretty easy for people to get back in the sense of, oh, it's okay to travel, by air, because they felt that they had things under control, right? So basically, you got to a microscopic number of cases by early March. And so by mid-May or whatever, for people to fly around, I think it just didn't seem that much of a problem. I think the difficulty that you have in the United States is that, okay, so the epidemic has simmered down in New York. It's now spreading through the South, and at a lower level, but it's still percolating. And so are people going to feel comfortable sort of putting themselves in an airplane and maybe going to places where the virus is a lot more prevalent? I don't know. I tend to think that the actual pickup in airline travel in the United States is going to be slow and rocky. And I think there is some risk that you have locally some pauses in these reopening process. We've seen this in the state of Oregon, for example. I think we've seen this in a few cities like Houston, that they've said, we were starting to reopen and now we're going to stop for a while because we don't really think that we have things under control. And so I think with this kind of unpredictable spread of the virus around the country, that's going to make it slower for U.S. domestic travel to pick up air travel.
Yeah. Another issue that I get a lot in terms of our clients, and again, because LATAM is so focused on raw materials.
Yeah.
So for us, it's extremely important to see the perceived level of demand from China.
Yeah.
In terms of soft commodities and hard commodities, Chile
Right.
with copper, and Colombia with oil, and Brazil with oil, and also with soft commodities.
Yep, right.
From the analysis that you guys are doing, I mean, I think that when I saw you in New York, you mentioned that there could be a hit because of the lockdowns of about 4 million barrels of oil a day less in terms of demand. Closing. Are we back into the 10, 12 million daily demand in terms of oil?
Yeah, that's actually a good question. To be honest, I haven't looked at those numbers lately, so I'm going to take a pass on the specific thing. My guess would be that because we still are seeing somewhat subpar industrial activity, car driving has come back quite a bit, but I think air travel is still down somewhat. I would be very surprised that if we're back up to pre-existing levels of demand on the oil sector, and on the hard commodities, the construction complex. I think the news there actually is pretty decent, because you've seen a very strong rebound in construction activity. This was basically the first thing to bounce back. And the government now, I think, is in the position of they're happy to have that bounce back, but they actually don't want so much activity that you get these excess inventories. So they're more in the realm of trying to control things around the edges. So I think the sort of the copper, iron ore commodity complex Well, so first of all, I think you've seen most of the rebound that you're going to see this year. So it's not like we're going to get another big leg up. But I wouldn't think that you're going to see too much downside this year because the government really does want to keep things going. So it's a sort of a somewhat positive story for commodities, but clearly not the kind of positive blowout that we saw in 2016 or 2013 or 2009.
I forgot to do to ask you actually a follow up on something that you said, which is very relevant, which is the news out of Beijing today, and I was in Wuhan. They tested how many people in like
Right.
5 days. It's just unbelievable how the Chinese government is able to do that. So, just from the standpoint of pure logic, and I don't know if you would agree with this view. I know we have this renewed outbreak because of the salmon or whatever in the Beijing.
Right.
Then you close the schools, et cetera, et cetera.
Right.
I personally think that there's a very low risk of this thing getting out of hand when you have the testing capacity and the contract tracing and all the technology that you're using, right? I'm sure the Chinese government is already doing the aggressive contact tracing at this point in time.
Right.
Would you be concerned about, plus the weather is warm right now, would you be concerned that this may actually get out of hand if you were to make a bet, obviously?
This is so hard. I think you're right. Your basic observation is that China has a lot of state capacity that they're willing to throw at this. It's a much bigger and more complicated country than Korea, for example. So in Korea, they can just test everybody and contact trace and really have it under control. China, it's a little bit harder simply because they're so large. But basically the idea is the same, that they can be very aggressive about that. So the state capacities to get these things under control is extremely high. That's a good thing. The possibility of renewed outbreaks, so I would say with high degree of certainty that you're going to see more cases like this situation with the market in Beijing. Because the country is just too big. I don't think they actually got it down to zero. There is going to be stuff popping up here and there. And I think as long as it's at that level, they can pretty much deal with it. Your question about an outbreak in colder weather, it could happen. The science on that is very ambiguous. I do not think that there's a scientific consensus about whether this is a virus that is really seasonally sensitive. You've been seeing big outbreaks in warmer climates. The numbers from India are really bad. So it's not obvious to me that you have that you have
The weather effect.
Yeah, a weather effect, but it could be, right? It's a complicated thing. I know the Chinese government is very concerned about that. They're quite worried that maybe they will get that. And I think on that, we just have to kind of wait and see. But I guess my base case, if you put me against the wall, my base case would be that it's not a big second wave. It's more like an outbreak here, an outbreak there, and it's something that can be handled essentially by local measures at the district level, which is how they're trying to handle it in China. So that not the city level, but below the city level, a district within the city. And as long as it's that, then I don't think that really gets in the way of the economic recovery.
Good. We're getting to the end of this. We only have a few minutes left, but I think that it's and I agree 100% with you in terms of just from the conversations all over that you have here in the U.S. It doesn't matter if your friends are independents, Republicans, Democrats. It doesn't matter. I mean, the China banking situation in the U.S. is getting out of hand.
Right.
It doesn't matter what kind of political ideology you have. So for me, it's a given that this campaign going into November 2020 is going to be in large part a function. I mean, if you need to get some additional points, you're going to lambast China here and there, and the Republican side is the Chinese virus, and the other one it's
right,
rights, et cetera, et cetera. So that's a given. But Xi Jinping doesn't need to win an election.
Yeah.
He doesn't really care about this specific.
Yeah.
So what is the political reaction function of China to this increased level, and specifically on, because I was brainstorming the other day, what if Xi Jinping one day says, I had it with these people, I'm just not going to buy any more grains from the US, et cetera, to try to influence that election. Do you think that's a possibility, or they're going to be much more pragmatic about it? And tied to that question, obviously, would it be who does China like or think it's better going into the next 4 years? Do you want to get Biden, or you want to stick with Trump?
Yeah. So a couple of observations on this, which is that. So you're right. Xi Jinping can play a longer game. I noticed there was a question in the chat about whether they would sort of ramp up, use of their U.S. Treasury holdings or the renminbi exchange rate. I think they've shown basically a lot of, I don't know if I want to call it restraint, but there's certainly been a lot of reluctance to hit back in big ways against the U.S. And I think one of the reasons for that is that they realize that anything they do to hit back at the U.S. is going to hurt them as well. And this applies to selling off their treasury holdings or devaluing the renminbi. Those really get in the way of their ambition to be seen as a big player in the global financial system. And they want to have an internationalized currency, and they want people to buy renminbi bonds. And if you start messing around with other people's fixed income markets in that highly political way, no one is going to want to touch your markets. So they do recognize that for their longer term goals in the financial arena, they have to be quite restrained. For their longer term goals in technology, right, they also need to be restrained. They're very dependent on U.S. company investments and technology transfers and so forth. And they've been trying very hard to get U.S. companies to invest more money in China, even as these trade wars are going on. And, the reason that they do that is that they know that their market is really their leverage. And the more that U.S. companies are dependent on the China market, the more those companies will push against hardline tactics by the U.S. government. So again, it's really not in their interest to be highly aggressive. So I think what we're going to see is that the Chinese are not really in a position to use a lot of anti-U.S. kinds of instruments that produce an effect in the short term. Basically, their strategy has to be to just hunker down, try and mitigate the bad things that the U.S. is trying to do to it, and ramp up the pace of their own technological and financial development, so they become less dependent, frankly, on the U.S. So that's, I think, how things look from the Chinese side. That they're willing to play quite a long game on this. And then from the standpoint of the U.S. election, so first objectively, right now the polls are very favorable to Biden. If the election were held tomorrow, he would almost certainly win it comfortably. That could easily change. Basically all you need to do is get a 3 or 4 percentage point shift in 5 or 6 states, and the election would swing to Trump. And that's something that could certainly happen in the next few months. So I view the outcome of this election as still, impossible to, judge with any degree of confidence. In terms of what the Chinese want, I think they do recognize that whoever gets elected, they're going to have a tough time, that the Democrats don't like them, the Republicans don't like them, and that Trump is sort of a representative of the economic nationalist sort of view, but the Democrats are very much the representatives of the human rights and values views, which are also very negative on China. I think there's a lot of speculation out there that they would actually be happy to see Trump reelected, essentially because they see Trump as so destructive of American power in the world and American alliances, that's good for China, because it creates more room for China to expand its international influence. And I think that's a pretty plausible take. What I can say is, in the interactions, I'm involved in a bunch of dialogues with Chinese counterparts at the non-governmental level, and they basically think that the US government has gone crazy, and they're kind of tearing their hair out. And so I think the kind of people that I interact with, who tend to be sort of the more liberal internationalist people in the Chinese system, they would love to see Trump gone and a return to some kind of more normal relationship with the United States. And I think that also reflects some government thinking, that they are very frustrated that there are so few channels of communication with the U.S. And that is unique to the Trump administration. If Biden is elected, I think one thing we know for sure is that a lot of the government-to-government channels that have been closed by Trump will be reopened, and that this will, I think, give the Chinese more of a sense of security. So I think bottom line, they recognize in China that they're in for a somewhat difficult time, regardless of who gets elected.
Great. Well, we have time for one last question, Arthur, and this is a question I love to ask speakers like you. It's a pretty simple question, and there's no agenda here. What keeps you awake at night? If you choose one thing.
I would have to, well, I guess it depends on how you define the universe of concerns. But the thing that worries me, I would say most, in the domain of China, the China region, and the US-China relationship, that whole thing, is unquestionably Taiwan. Not because I think that there's a high risk of anything bad happening there. I think the risk is very low. It is the one, we talk about all of these other things, Hong Kong and technology and blah, blah, blah. And I think almost none of them are severe enough that they could actually cause an armed conflict between the US and China. They can all be managed by some kind of negotiation, diplomacy. Taiwan is the one thing which I think could actually start a shooting war if the Chinese decided to be aggressive there, or if they perceived that the US was doing something against their interests and felt that they had to be preemptive. And the reason that I'm worried about it more is that, to be frank, I don't think that the US administration now is very responsible about this, because they've put together this very confrontational attitude towards China. You can understand a lot of the reasons for that, but they've also removed all of the guardrails, right? So there are no, as I said, there are no government-to-government dialogues. There are no, none of the traditional sort of diplomatic things that you have on the sidelines to de-escalate tensions, right? And you have very few people within the administration who are willing to argue that de-escalation is a good thing. They basically think, no, escalation is good because we have to show how tough we are. And correspondingly, you're seeing those kinds of voices in the Chinese government becoming louder and more influential, because essentially they're saying, look at the US, that's what they're doing. We have to protect ourselves by getting tougher. So you're in a classic escalation cycle between two big countries that are posturing, and frankly, I do not think have the wisest leadership possible. And so that means that even though the risk of something happening in Taiwan is quite low, if something does pop up there, I have very low confidence that these two administrations will be able to deal with that crisis and de-escalate it. There's a much higher risk that they would escalate it. So don't want to frighten people. That, by the way, that frightens me much more than Kim Jong-un and his nuclear weapons and stuff like that. That's something that could really, completely change the entire chessboard in the Asia Pacific if it ever happens. I hope it doesn't, but that's probably the number one in the Asia region. That would be the number one geopolitical risk.
Fascinating. Well, 5:30 sharp in New York. Arthur, thank you very much on behalf of XP Investments, XP Investimentos in Brazil. Thank you for joining us. As always, it's a pleasure to hear your views. To all of you who participated, thank you very much. And thanks to Gavekal Dragonomics. And Steve, thank you for your support. And see you soon. Hopefully, I'll see you next time in person.
Okay. Thank you very much, Alberto. It was great to talk.